Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with the gold analysis. You can see the sell-off that has happened, that we expected to happen, is done right now. So this is preliminary sell-off to complete the target that we have specified around 1750. And market, take a look now, is breaking the daily flag pattern, which is also looks bearish. It's not that oversold. It has chance to proceed higher, but well, currently this is inside session. But it is interesting that price stands, take a look, below the flag border, so it has no intention to return it back up. It stands below this level, and this is at least currently it looks bearish and with further downside continuation. Well, in the gold market we approximately expect the same type of action that we see right now on the euro currency. We think that if non-farm payrolls release will be more or less positive, around an expectation slightly higher, well, this will get some downside continuation here. So on euro currency in particular, we're waiting for 116.50 level. Here we also expect some downward action on the gold, but in the current situation, well, we could take a look at the higher time frames where potential target could stand, as we talk about this on the weekly chart. But particularly on the daily chart, we do not have some clear downside target, because in general market stands not too far from the oversold area, and that's why just the oversold could hold the overall downside action. So in general we could consider here some large ABCD pattern probably, because sell-off here stands rather strong, and in general it suggests the drop back to the lows. But let's take a look, as we have somewhere around 17 even, it's oversold area, and if a drop will start, so probably it will be stopped somewhere in this level. But then in general, overall context here stands bearish, of course. On the follow time frame chart, you could consider this, we have actually free drive on the hourly chart, but on the follow time frame chart it looks like just a butterfly. It's 127 targets complete, market trying to show some pullback here. Well, but currently we should understand that everything depends on the statistics that we will get. With this drop here in flat standing, it seems that market has not bad chance to proceed lower for another 10 bucks. 1618 extension of the same butterfly is 1740. Situation could reverse up again only because of the non-farm payrolls data. So currently, whether we would like it to not or not, but here we stand in a total dependence on the numbers. So it's statistics that will drive the market. Unfortunately, we can't predict it, but well, patterns that we see here suggest that it might be some relief, because market forming bullish patterns. This is a butterfly, this is free drive that we have on the hourly chart. Here is in fact what we have here. Third drive is completed. The breakout of this trading range, narrow trading range, also is completed, so market has passed to the downside approximately the same area as the width of the or height of this channel. So if you have the positions inside of this consolidation, as we said, you could keep them with the break-even stop, or maybe take your stop on some profitable level to you to book some result, because we do not know what numbers we will get, and the risk exists that market could return that back up. So to not take a risk and get some result of this trade, maybe it makes sense even to move stops at some profitable level, for instance just below the consolidation. Theoretically, we here also could consider some kind of the minor retracement before non-farm payrolls, just because of the free drive pattern has hit the third drive area. Maybe some ABCD action could happen. That may be useful for those of you who would like to take the short position, but you haven't did this in the consolidation that we have considered previously. So in the case of Gartner's triple to sell, you could take a look at the 1770 area. It also will be, as you can see, lower border of this previous consolidation. Maybe yours will be another opportunity to go short. But you should understand that in this case it will be more risky, because you will have to keep the stop not at the break-even, and if data, unemployment data will be negative in this case, it's probably you could get the loss on this trade. So, but this chance could appear maybe today, tomorrow. That's actually all that we could say currently about the gold market. Now the all eyes mostly stand on the numbers on Friday, and that will set the further direction in the gold. Preliminary speaking, based on the picture that we have on the daily chart, overall context looks bearish, and approximately the same action we expect on the euro currency.